My dear students, you are studying the online course on corporate tax planning. The objective of the tax planning is to minimize the tax liability within the legal framework. By this time, you have come to know the various process and the various factors by which a company can minimize its tax liability. We have already discussed in the last lecture the tax planning in the area of companies' employees' remuneration, how the company can structure their salary component to minimize its tax liability as well as the tax liability in the hands of the employees. In this current module, I am going to discuss another area of tax planning where the company can minimize the tax liability. Here we are going to discuss the factor like location of the business. You have already studied various provisions, various incentive provisions, various sections at your undergraduate level. But here in this current lecture, we will identify the specific provisions which will give the incentives to the corporate assessee by which it can minimize the tax liability. Here I am giving the stress on location. So you have to identify the sections or provisions which relates to the location of the particular business. And whenever a new business is established in a specific area, it can get certain deductions. The income tax authority has inserted certain sections, certain provisions to provide the tax incentives for such companies if they establish their new unit or new industrial unit in the specific area as notified by the income tax authority. Here I have identified certain sections, certain provisions for our discussion which relates to the location of the business, exclusively location of the business. So the benefit of tax exemption is being provided to the corporate houses if they fulfill certain conditions. Here we are discussing the location of the business. If new industrial unit or new unit is established in a specific area, they can get the deductions. For example, I have identified some sections for your understanding. Earlier we had two sections, section 10A and 10B. 10A is meant for new industrial undertaking in free trade zone and section 10B was meant for the new business in 100% export oriented units. But from the assessment year 2012-13, these two sections, that is section 10A and 10B, have been discontinued. Now we will discuss in detail the remaining sections like section 10AA, 80IB, 80IC, 80ID and 80IE. Section 10AA describes the new business unit in special economic zone. So I am giving the stress on location where such type of business is being established in special economic zone as per section 10AA. Then you may consider section 80IB. As per section 80IB of the Income Tax Act, any new industrial undertaking is set up in backward states. So I am giving the stress on location, that is backward states. Next one is section 80IC, new undertaking in certain special category states. So as per section 10AA, we get the special economic zone. Section 80IB describes the backward states. Section 80IC states that if the new undertaking is set up in certain special category states. 80ID describes the new hotel or convention center in NCT area, National Capital Territory area. And last one is the 80IE, new undertaking in northeastern states. So, if you go into detail, you can find the places, the location. So, income tax authority is providing the facility of tax exemption for such companies if they establish their unit. Obviously, it should be a new unit, new industrial unit in the specific area. It may be a special economic zone, it may be backward states, it may be in special category states, or it may be in NCT, National Capital Territory, or it may be in northeastern states. Now, let us see what the section 10AA says. Since the income tax authority provides the benefit of tax exemption, it has to comply certain conditions. If certain conditions are fulfilled, then the newly established unit in special economic zone can avail a deduction. How much it will get the deduction? As per section 10AA, 100% of profit and gains derived from the export or services for a period of 5 consecutive assessment years, beginning with the assessment year relevant to the previous year in which the unit begins to manufacture or produce or provide services. So, first consecutive assessment year beginning with the assessment year relevant to the previous year in which it began its operation. How much it will get deduction? 100% of profit and gains for 5 consecutive assessment years. And thereafter, 50% of such profit and gains for further 5 assessment years. And in addition to that 10 years, that is 100% for 5 consecutive assessment years from the beginning, then another 5 years for 50% of such profit and gains can be exempted. And if certain conditions are fulfilled, if the specific reserve account is created for a specific purpose for utilization of the fund for this unit, then it can avail another 5 years. So, this is the deduction. So, 100% for 5 assessment year from the beginning of the previous year in which it begins its operation, and then for 5 years 50% of such profit, and then again if certain conditions are fulfilled, another 5 years the company can get the deduction. So, the company is getting deduction if it establishes any new unit in special economic zone. So, section 10AA will be effective. Then you may consider section 80IB. In section 80IB, it says the amount of deduction in the case of industrial undertaking in an industrially backward states specified in the 8th schedule shall be 100% of the profit and gains for 5 assessment year beginning with the initial assessment year, and thereafter 30% of the profit and gains for the next 5 years. This is applicable for the corporate assessment. So, section 80IB. Section 80IB describes or says that 100% of profit and gains for 5 assessment year beginning with the initial assessment year. What is initial assessment year? Initial assessment year is the year in which it began its operation. And thereafter, so first 5 years it will get a deduction of 100%, and next 5 years it will get 30% of profit and gains as deduction. So, this is 80IB. In 80IC, you will get the location like northeastern states and Uttaranchal. Here, the condition will remain the same because it should be a new industrial undertaking. Whether section 80IB, 80IC, 80ID or 80IA is effective, the industrial unit should be a new one. It is not formed by splitting up or reconstruction of a business already in existence, mind it. And it is not formed by transfer of new business of machinery or plant previously used for any purpose. Certain exemptions are there, but the major conditions that it should be a new company. It should not be formed by splitting of the existing companies. Now, what would be the deduction? 100% of profit and gains for 5 assessment year, commencing with the initial assessment year, and thereafter 30% of profit and gains for the next 5 assessment year. So, company is getting the benefit of 10 years. For first 5 years, 100% is exempted, and next 5 years, 30% of the profit is exempted. So, this is 80IC. Now, 80ID, specified area of National Capital Territory. If any hotel or any convention center is constructed, new hotel and new convention center is coming up in National Capital Territory, then the deduction will be available. Deduction like 100% of profit and gains derived from such business for 5 consecutive assessment year, beginning from the assessment year. So, I am saying the initial assessment year. Initial assessment year is very important here, and the conditions remain the same for all 80IC, ID, IE. So, the business is not formed by splitting up or the reconstruction of a business already in existence. The eligible business is not formed by the transfer of new business. So, you have to keep in mind, and the eligible business is not formed by the transfer to a new business or machinery or plant previously used for any purpose. Certain exemptions are there, but you have to consider, you have to keep in mind all these conditions, all the 3 conditions are to be fulfilled to get the deduction under section 80ID. Now, 80IE. 80IE, the conditions remain the same. Here, the amount of deduction would be the 100% of profit and gains derived from such business for 10 consecutive assessment year, commencing with the initial assessment year. Condition remain the same. But here you have to keep in mind the term initial assessment year. Initial assessment year means the assessment year relevant to the previous year in which the undertaking begins to manufacture or produce articles or things or provides the services. So, this is the initial assessment year. Now, you have come to know the companies are exempted from paying the tax, say for 10 years, 5 years, for 100%, 50%, 30%. So, companies are allowed to continue their business without paying tax for this period. This period for which the tax is not being paid by the company is called the tax holiday. So, the tax holiday may vary from section to section. It may be 10 years, it may be 5 years, but depending on its location of the business. So, here I have discussed so far the sections which are applicable for location. We have only considered the sections which relates to the location of the business. We can sum up the sections, we can summary the slides like section 10 AA for special economic zone, 80 IB for backward states, 80 IC is applicable for special category states, 80 ID is meant for NCT areas, that is National Capital Territory area, and 80 I is meant for northeastern states. So, this is all about the content on location of the business. So, this is very important area in which the company can act. If company think before commencement of its business, it can save certain amount of tax if they establish their new unit in such areas which has been specified in section 10 AA, 80 IB, 80 IC, 80 ID and 80 IE. So, all sections, all provisions relating to the location of the business, and all these sections provides the tax incentive to the companies who establishes their unit in the specified areas. So, thank you. I hope you have understood the concept of tax planning relating to the location of the business. Thank you.